IRS officer, regulator from NCA, SEBI, CII, IBBI, former regulator, industry leaders, corporate professional from various corporates, and practicing professional have shared their knowledge through this platform. And in the presentation you have seen, and because of this, whatever changes people are suggesting, whatever queries they are having, we are submitting to the regulator at their regular intervals. Today's program is also very important because we have planned that whenever their law is coming, it is the best time to suggest regulator to bring these changes, because that is in the making stage. But after the law is there and then you create suggestions, it is no use, and it is a cumbersome process also. So in this process, whatever new proposal is coming from SEBI side or ministry side or any consultative paper is coming, we are doing this type of webinar, and we are trying to identify the changes suggested by the regulator, that why this changes and what will be the impact. And that's why we called regulator, professional, and the industry people, so we can take their views. Friends, as you are aware, SEBI has issued 2 consultative papers to seek suggestion on the proposal related to certain measures towards ease of doing business of REIT and InvIT and non-convertible securities. The deadline for submitting comments is 30th May, after 5 days. The objective of the webinar is to discuss the recommendation put forth by the SEBI-appointed Working Group and gain insights into the potential implication and impact of the proposed changes. The various prospective and suggestions of the participant coming out from the webinar will be collated and sent to SEBI for his consideration. Simultaneously, we are doing poll also during the webinar, and these poll result we will also submit to SEBI. Now we have invited the galaxy of speaker, and very interestingly, the people, those who have made this particular changes, so we can understand their point of view and we can get the best result from the origination and the reason of these changes. So now I extend a very hearty welcome to the chief guest of today's webinar. Ms. Harni Balaji is a Chief General Manager in Department of Debt Hybrid Securities, SEBI. A career regulator working in SEBI for last 25 years, gained insightful experience having worked extensively in areas of fund management, corporate restructuring, governance, secondary market, policies, and surveillance. She has been instrumental in bringing the SEBI LODR regulation, implemented various policies, measures related to trading of security of the stock exchange and administration of depositories. Worked extensively on process, norms, and governance of delisting and its consequential impact on stakeholders. Worked on various operational issues in takeovers, mergers, and acquisition, including policy initiative. So you can understand the wide area of knowledge that Ms. Balaji possesses, and her impactful career in the SEBI since last 25 years is the indication that whatever she is doing, she's coming out very differently, and a treasurer of knowledge. Today we will hear to her. So I welcome Madam for this webinar. Now I extend a very hearty welcome to our other learned speakers. We have Ms. Rishi Barua, a Deputy General Manager in Department of Debt and Hybrid Securities, SEBI. He pursued MBA from BHU. He joined SEBI in 2006, worked in different departments like IMD, ISD, IID, MRD, Western Regional Office, and presently posted at DDHS in the Department of Debt and Hybrid Security. I welcome Rishi for today's webinar. Then we have Ritesh Nandwani, a Deputy General Manager in Department of Debt and Hybrid Security, SEBI. He is an experienced capital market professional with over a decade of experience in securities market, especially in capital raising, policy framing, equity research, and monitoring. fixed income securities and derivatives and risk management. I welcome Ritesh for this program. Then we have a Pawan Chaudhary. He's Assistant General Manager in Department of Debt and Hybrid Securities and SEBI. So I welcome Pawan for this program. Sorry. Then we have Ms. Kiran Damle. She is Assistant Manager in Department of Debt and Hybrid Securities, SEBI. She involves in handling policy matter related to corporate bond. Before joining SEBI, she has been worked with IDBI Capital, Market and Securities Limited, Power Grid Corporation of India. So I welcome Kiran for this webinar. Then we have another speaker from the industry, Ms. Charu Patki. She is Group Company Secretary, Compliance Officer, and Legal Counsel of Nexus Select Trust. This is the one of the first urban consumption center real estate REIT trust. There were 17 consumer centers, 14 cities they have, and they have around 9.9 million square feet under their trust. And till today, they have the tenants' sales size is 120 billion, and there is 130 million footfall is there, and there in the Nexus Select Trust. So this is one of the top 5 trust REIT in India. And Charu, she has over 20 years experience in listing BSc, NSC, LODR, RET, and total due diligence, restructuring, litigation, commercial drafting. So her experience in this particular industry and her knowledge and different area will definitely help us and to come out a good solution and suggestions. So I welcome Charu for this program. Then we have Ms. Charu Ghatkar. She is Manager Capital Market Corporate Professional. I welcome her. And then Priyanshi Mittal. She is Senior Associate Corporate Affairs and Compliance Corporate Professional, and she looks after the REIT and InvIT advisory to the companies. So, friend, the program structure will be like this. After my introduction, Harni Madam will tell as a chief guest address, and she will give you the overview of this particular changes and any other thing related to InvIT and what they are planning. Then Priyanshi will give presentation of REIT and InvIT, and after that we will take up the question which SEBI has given in their consultative paper, and we will take the view from the regulator, view from professional, and then view from the industry. So the purpose of this questions and discussion is that we can come out the best solution. So when they are finalizing the law, they can incorporate if there anything is missing out, anything is impractical, something regulator can do. So that is the basic purpose we want to do. After completing the InvIT and REIT, then we will take up the NCS, this non-convertible instrument, and same structure we will follow. Charu Ghatkar will give the presentation, and SEBI and the industry team will discuss on this issue. And after that, we'll take up the general questions of public, which will come. So by this way, we will move on. So friends, I was just reading this particular changes in InvIT. The point is, what is the status today? Because sometimes people, because this is not very popular instrument. Institutional investor is coming, but retail investor is not coming to large scale. And no doubt listing has given this opportunity, but today also, if any issue is coming, more institutional investor is coming. So we have to just understand and communicate and educate the investor that why they should do this. So if I can just say, the REIT is like a mutual fund for real estate. Instead of buying individual property, you can invest in a REIT which owns a collection construction of properties such as office buildings, shopping malls, and apartment. And you invest money in REIT, and they use this money to buy and manage real estate. Same thing happened in the InvIT. This is also similar to REIT, but the focus is on infrastructure projects like road, bridge, power plants, and telecom. And this is also work on the same way. Investor put money and then they use this. A non-convertible instrument is just like a bond market. You invest in a fixed return. You don't want to take risk. So this is all three instruments which we are talking on. In India, we have seen there are there are top 5 we see. Embassy Office Park is there, Mid Space is there, Brookfield is there, Nexus is there, Tata Realty is there. And all these, their focus is commercial, somebody's retail, somebody's consumer, like Nexus is focusing on retail, real estate, consumer related thing. 5 top InvIT in India is IRB, India Grid Trust, Power Grid Transformation, and this L&T Infrastructure, India InvIT Fund Trust. So that is sponsored by L&T. Now, if I see the international market, then the top 5 REIT is American Tower Corporation. Prolog is the USA. The focus is logistic and estate, warehouse and distribution. Simon Property, they of USA, they malls and retail properties. Unix USA, that is they are focusing on data center and internet connection point, which India is not taking this type of thing, but in future, because so many data centers are coming. Then public storage, that is a US another, that is a self-storage facility. They are putting money in this. Like 5 top InvITs, I can say. Brookfield is there. They of Canada. They focus utilities, transport, energy, and infrastructure. And then Trans-Urban Group of Australia. They are also focusing on urban toll road network. And Ferry Wheels, this is a Spain-based company, transport infrastructure. Then Macquarie Infrastructure, that is Australia-based transport utilities. And then Global Infrastructure, that is a US. They focus on energy, transport, and water assets. So you can understand these are the very big InvIT and REIT fund in the other part of world, and they are really working greatly. So the point is that what is the status of this Indian market and international market? The point is the maturity and market size is different. India started in 2019 and internationally US started in 1960. So you can understand we are starting after 59 years. A regulatory framework, it is managed by SEBI, and then there's a recently tax policies has make it more interesting. US also, they are also giving tax benefit, and SEC and FC in UK, they manage. Asset type in India, we have seen the office space with some diversification, retail and industrial space, that is a portfolio we are saying, but internationally, they follow commercial, resident, industrial, healthcare, and data center. Now, India data center is coming, so that is also in future, it will come. Investor base, India, for majority, it is allowed to both institutional and retail, but retail investment is less because they don't understand this concept. So that's why, but you see the other part of that, they have a base of institutional, retail, both, because they are more giving education. Then maturity and market size, no doubt, we are relatively new with the first InvIT launch in 2017. In USA, they are popular. In Australia is very ahead, and North America, they are far ahead. Regulatory framework in India, SEBI has made it, and it is evolving. But in USA, they have a well structured, and the asset type and the portfolio is also very interesting. India toll road, power transmission, other things they are covering, but they are covering the larger part, transport also. They are covering utilities also. So you can understand that we are in the process of maturing, and our product and other things are slowly, they are changing. Tax incentive is there, that is there. So ultimately, we have to work out the future prospects of this InvIT and REIT should be there. A market growth will take place. So more and more people will come. Regulatory is always ahead doing something. So that will also enhance. The more people should bring out this type of concept, and tax reform will help. Investor participation will increase. Then the more fund will come and the market will mature in the spaces. So these are some thoughts which I have shared with you. And now I will request our chief guest to speak. Before she speaks, just I want to announce everybody our next webinar on recent amendment on LODR and ICDR regulation is on 31st May. And this program we want to do on recently SEBI has come out so many changes after the recommendation of Industrial Forum. So we will discuss threadbare on rumors and the protected price, other concept will do. So over to you, Hani Madam, to you.
Yes. Thank you so much, Mr. Pavan. So good evening, everybody. So it is normally said that being in the right place and at the right time is very important. So I do think genuinely that this program is at the right place and at the right time. It could not have been more timely to have a discussion on the topics, and these topics will result into policy changes which the regulator is envisaging. I do thank corporate professionals for taking this initiative and arranging this program. Going forward, such programs just during the consultation papers could lead to better understanding of the nuances that the market participants like the industry and the intermediaries that they face while taking forward their business interests in compliance with the regulatory requirements. Independent organizations like corporate professionals play a pivotal role in bringing together the regulator and the regulated entities in more ways than one. This program is one such way in which we could interact very seamlessly with the market participants and know and understand the nuances of business in a more and appreciate it in a more positive way. So this indeed is a very appreciable effort, Mr. Pavan, and thank you so much for that. To give a short perspective of what our consultation papers propose and hope to achieve, let me start with the genesis, which has a greater objective. As you all know, and as per the current narratives, India is at a cusp of a tremendous growth phase. Even internationally, the growth perception of India is positive and it has been recognized in many fora. In order to leapfrog into the next growth phase, government has taken many initiatives, one among them being to simplify and reduce the compliance burdens through a consultative process. While this seems very minuscule in the larger scheme of things, you all would agree that this word compliance is anathema to some, fearful to some others, and music to our ears. We are often derided for making complex and difficult regulatory provisions that the businesses find hard to understand and hence abhor or become fearful of the regulator. Recognizing the imminent need to ease the compliance burden, government has in its budget speech has also made a specific mention of the need of ease of doing business and has nudged the regulators, actually all the regulators, in not so subtle ways to bring about the required changes. So, in order to align the process of review with the budget announcements, SEBI constituted many working groups across board to recommend measures to simplify and ease compliances and thereby aid in the ease of doing business. So the consultation papers are the result of these initiatives that coming from the government and drawn down by the regulators. So these are the result of these initiatives. There are two basic consultation papers that currently have been put out by our department, which comes under our purview, which we will be discussing this evening. The first one will be measures towards ease of doing business for REITs and InvITs, and measures towards ease of doing business for non-convertible securities will be the second one. So there are simple points that are there in the consultation paper. If I tell the details, then the team will not be able to explain. So I will keep myself short and I will allow the team to go ahead and tell. For REITs and InvITs, there are a total of six proposals common to both REITs and InvITs, and two proposals that are unique only to InvITs in the consultation paper. So the six proposals are something like a revision of timelines for distribution and unit holders meetings with a shorter notice, and some disclosure facilitations, and clarifications on voting thresholds, maintenance of records. And the one that is only unique to InvIT is the reduction of trading lot and aligning some of the provisions regarding to change in sponsor with that of the REIT. So for the non-convertible securities, there are a total of 7 proposals. So there are one deletion of disclosure regarding PAN and personal details of the promoters, keeping in mind the privacy issues. Then disclosures, 2 points on disclosures in the offer documents. One through the QR code and the web link because of the increasing usage of technology. Then one is in the alignment of disclosure requirements in the offer document with that of the equity. And the other one is relaxation in the requirement of providing certain businesses and commercial details in case of purchase or acquisition of immovable properties. Then another one is a flexibility in the signatories for the purpose of providing attestation in the offer document. And the last one is modification in timeline for submission of status regarding payment obligations to the stock exchanges by the entities that have listed the commercial papers only. So while I leave the floor for a healthy discussion on these topics that are stated above, I do urge the participants who are coming, as Mr. Pavan Vijay said, that they are coming from all over the place, from the industry, from intermediaries, company secretaries are there, compliance officers are there. Many people will be there. Already I see around 106 participants over here. So while we can have a healthy discussion on the topics, I do urge the participants to take such opportunities to comment on the proposals in an effort to bring out the best for both the industry and the regulator. So these kind of interactions go a long way in serving us and to serve you better. So that's it. We need to be helped so that we can help you. So with that, I leave the floor to the team, and I leave it to Mr. Pavan Vijay to take it forward.
Okay,
Thank you so
thank you
much.
very much, madam. And you have rightly pointing out that by the healthy discussion and the way people can suggest today, it will definitely give a chance to you when you are coming out the final now. So now we are starting. So Priyanshi, please give about the InvIT and REIT. What are the changes? And give a little bit overview also. And then I will raise the questions after you complete the session.
Sure, sir.
Over to you.
I'm audible?
Yeah, you are audible. Just
Let
little
me
loud.
Sure. Let me just share my screen quickly.
Yeah, it's clearly visible. Just go and do the slide share. Yeah, it's okay.
So thank you so much, ma'am, for sharing your valuable insights with our viewers. Before taking up the consultation paper, let's quickly try to understand what actually REITs and InvITs are. So starting with the REITs, a REIT is a SEBI-registered real estate investment trust, an investment vehicle which pulls money from the investors, and it invests such funds in a high-value real estate properties like commercial buildings, office spaces, malls, etc., against the issuance of its units to the unit holders. And although this REIT concept was already very popular in foreign countries like US and Singapore, it was in 2014 we witnessed SEBI bringing up the REIT regulations in India. And it was only in 2019 where we could see the listing of first REIT in India. But now, since the first listing, it has become quite a relatively popular concept in India as well, as we have seen more and more investors investing in such vehicles. Now, talking about how these REITs work, so this REIT earns in the form of rent and potential capital appreciation as it invests in high value real estate properties, and in turn it distributes such earnings in the form of distribution to its unit holders. REIT has to mandatorily get its units listed within 3 years from the date of registration with the SEBI. Otherwise, it has to surrender its registration certificate. If we quickly talk about the structure of REIT, so these are the parties which are involved in a REIT. A sponsor who sets up the REIT, who conceives the idea of setting up a REIT. Then it is registered in the form of a trust. So we have a trustee who oversees the function of the REIT and protects the interests of the unit holders. Then we have a manager who manages the asset and investments of the REIT and undertakes all the compliances on the part of REIT. A REIT, when making investment in a property, it can either invest directly through a SPV, which is a private company or an LLP. So, or it can invest through a holdco. So these are the main parties which are involved in a REIT. If we talk about the funding, the earning structure, then there are investors who invest their funds in a REIT and in turn they get the distribution. The manager gets the management fees from the REIT, and the SPV and holdco also gets the earnings from the properties, and then in turn they have to give that as a distribution to the REIT. So as of now, there are 4 listed REITs in India, with Embassy being the first and Nexus being the 4th. There are other REITs which are in the process of getting listed, and in future we are set to see the other listings as well. Coming to InvITs, InvITs function in a way very similar to REITs. Now, while REITs invest in the commercial and commercial or consumer-based real estate properties, InvITs invest in government projects like roads, bridges, power plants, highways, and airports. So these are the projects where the InvITs invest, and their source of income basically is rental and toll income. So the toll income they get from the highways. So that is their main source of income. As REITs are managed by a manager, InvITs are managed by an investment manager. And more or less the structure and the compliance requirements are same. These are few of the top listed InvITs in India currently in no particular order. So we have Bharat Highways InvIT, Tata Structure, Cube Highways, India Grid, Power Grid, and there are, I think, around 25 listed InvITs as of now in India, other than privately placed InvITs, of course. So since we have now acquired a basic understanding of how InvITs and REITs work, let us take a look at the consultation paper. Although ma'am has quickly taken us through all the points that have been, the recommendations that have been made by SEBI in these consultation papers, let us discuss those one by one. So we had SEBI had formed a working group which made its recommendations, and based on the report of such working group, the HISEC committee, Hybrid Securities Advisory Committee, considered those recommendations, and based on their report, SEBI has formulated these consultation papers. So first recommendation is with respect to the distribution timelines. So presently, the law requires the REITs and InvITs to make periodic distributions. And once such distribution is declared by a REIT and InvIT, so these distributions have to be paid to the unit holders within 15 days from thereof. Now, since this 15 days was enough time for REITs and InvITs to make the payment, but there were a few challenges that were faced while making such payment, like the holidays, since there was no prescribed law regarding the record date or the this filing of record date with the stock exchange or fixing the record date. So there were a few challenges that were being faced. Based on the recommendation of the working group and the HISEC committee, it is now proposed to reduce the timeline to 5 working days instead of 15 working days from the date of declaration by the manager or investment manager. Also, flexibility has been proposed to be given to the manager and investment manager to fix the record date. Currently, since there was no fixed provision for this, so the REITs and InvITs were following the provision given in the LODR regulations for fixing the record date. But now the flexibility has been given by the SEBI to such manager and investment manager. Also, they were following the LODR regulations to filing at least 5 days in advance the record date with the stock exchange. But now, based on the recommendation of SEBI, the manager and investment manager shall be required to intimate the record date to the stock exchanges at least 2 working days in advance, 2 clear working days, excluding the intermission in their record date. Coming to the second recommendation, it is regarding the holding of unit holders meetings. So, as we know, companies are allowed to hold their shareholders meeting at a shorter notice, subject to receipt of requisite consents from their shareholders. But there was no concept till now in REITs, in case of REITs and InvITs. They required to give at least notice of at least 21 days for holding such unit holders meetings, except in case of SM REITs where the law states 21 clear days. Now it has been proposed to include provision for holding such unit holders meeting at a shorter notice consent, subject to receipt of consent from 95% of unit holders who are entitled to vote at such unit holders meeting. So this is a very welcome change because there are multiple circumstances. There are many instances where managers are required to hold such meetings on immediate basis. And there are multiple scenarios where prior approval from unit holders is required. So it becomes a challenge for managers to undertake such projects or undertake such decisions. So this will facilitate seeking quick approval from unit holders quickly, and subject to receipt of consent, now they will be allowed to hold such meetings as shorter notice consent. And also in case of SM REITs, this provision is already there. This is for REITs other than SM REITs and InvITs. In case of SM REITs, the provision for obtaining shorter notice and holding such meeting at shorter notice is already there. So this is for REITs other than SM REITs and InvITs. Moving on to the next recommendation. This is regarding the filing and review of statement of investor complaints. So there is the statement of investor complaints the REITs and InvITs are required to file within 21 days from the end of each quarter. It's a quarterly filing. Now, since although this filing provision is clear, there is a requirement in the law which requires such REITs and InvITs to prior review such statement before the submission with the stock exchanges. So prior review is required to be done by the trustee of the REIT, InvIT, and by the manager of such REIT and InvIT. So this prior review was always a challenge because we are already required to hold a board meeting for approving the financials on quarterly basis. Now, since this submission has to be done within 21 days, so sometimes this manager had to hold the meeting twice, one for the giving the prior approval, prior review for the statement, and then for approving the quarterly financials. So this was a challenge which has now been solved by this recommendation by SEBI. So SEBI has proposed to remove this requirement of prior review of such statement. It has only now mandated that such statement shall be placed before the board once filed. There is another compliance requirement, which is regarding the disclosure and filing of statement of material deviation, if any, in the utilization of proceeds of the funds raised by REIT or InvIT. So now currently, whatever funds are raised by REIT and InvIT, so if there is any material deviation or even if there is not, a statement of such disclosure has to be filed with the stock exchanges, disclosing the same. So the present requirement is to file it within 21 days from the end of each quarter. It's also a quarterly filing. Although the listed companies are required to file it along with the financial results as per LODR regulations. So SEBI has made this attempt to align this requirement for REITs and InvITs with the existing LODR regulations. And SEBI has proposed that such statement of deviation shall now be required to file along with the publication of quarterly financial results. So instead of filing it within 21 days, this can be filed along with the filing of financial results itself. So this will be in line with the LODR regulations. The next recommendation relates to the clarification on voting threshold. Now, this is a very, very welcome change because the current REIT and InvIT regulations have prescribed certain voting threshold limits. So whenever we require any approval from unit holders on a certain matter, so there are two criteria prescribed in the current regulations for both REITs and InvITs, and it is based on the proportionate terms. So for few matters which are prescribed in the REIT and InvIT regulations, so for some matters we require the voting to be more than the against the votes made in against. So the favorable votes need to be more than the unfavorable votes. for that resolution to be considered as as passed. Now, there are certain other matters where the votes have to be at least 1.5 times the votes cast in against. So the favorable votes has to be at least 1.5 times again the votes cast in against. So these proportionate terms were at times they could be confusing, since to ascertain the exact voting threshold required for considering a resolution item to be passed. Now, SEBI has proposed that these voting thresholds be prescribed in percentage terms instead of proportionate terms. So wherever the votes are required to be, wherever the favorable votes are required to be unfavorable, more than the unfavorable votes. So the percentage terms has now been prescribed as at least 50% instead of proportionate term. And in case where 1.5 times was prescribed, so the percentage term would be at least 60%. So this percentage term will give more clarity to the managers and investment managers to ascertain when a resolution is considered as passed and when it is not. And also one more thing has been proposed, that this voting thresholds, this at least 50% and at least 60% criteria, it will be calculated based on the unit holders present and voting in the meeting. So this present and voting thing, it is not there currently in the present regulations. So this has been clarified now, that the percentage will be calculated on the basis of persons present and voting in the meeting. Also, the REIT regulations and InvIT regulations earlier included a provision to hold such unit holders meeting physically. SEBI, via its circular dated January 12th, 2023, introduced this concept of holding unit holders meeting through audio and this video conferencing and other audio visual means also. So although there are circulars which allow such REITs and InvITs to hold meeting through VC, there is no particular provision which allow REITs and InvITs to hold such meetings in hybrid mode. That is physically and also through VC. So there is a written provision there. Now, SEBI, with a view to maximize the participation of the unit holders in every unit holder meeting, SEBI has proposed that in every unit holder meetings, you have to give an option to the unit holders to attend that meeting through VC as well. So that means even if you are holding the meeting at through physically at a venue, then also you have to give the option to the unit holders to attend it through as well, to maximize the participation and to combat the geographical challenges which the unit holders may face while attending such meetings. Also, since this VC option is to be given, so you also have to, InvITs will also have to give an option of remote e-voting to such unit holders, so that they can vote on a respective proposed resolution through their respective locations. So another recommendation that has been made is with respect to maintenance of records in electronic form. So currently the provisions which are there in REIT and InvIT regulations is that REIT regulations provide that the managers must maintain the records of REIT in physical form, and electronic form is allowed for trustees. Now, this may not have been the intent of regulator, but the literal provision has been interpreted as this only, that the managers must maintain the records of REIT in REIT, and the second sub-regulation of that particular regulation states that the trustees can maintain the record in electronic form. Also, so this has been, SEBI has now proposed to clarify this provision and to specifically include the statement that the manager is also allowed to maintain the records of REIT in electronic form. Similarly, for InvITs, InvIT regulations currently do provide for maintenance of records by both trustee as well as by the investment manager of InvIT in electronic form. So this is clarified for REIT. REITs and InvITs that both can maintain the records of REIT, InvIT respectively, and the trustee records in electronic form. Also, the REIT and InvITs, while maintaining such records in electronic form, has to ensure a few other things. First is the backup system. There has to be a backup system for such electronic records maintained. The disaster recovery norms, the REITs and InvITs are required to comply with the disaster recovery norms so that the data is never lost. The this. So backup system has to be there, recovery system has to be there, and all this accessibility to access, accessibility should be there to access such records at any place from anywhere at any time. So these are the, and this business continuity plan should be there. So the REITs and InvITs have to ensure that a business continuity plan is in place where such records are maintained in electronic form. Now, while these proposals were common for REITs and InvITs both, there are two proposals which have been made specifically for InvITs. First is the reduction of trading lot. So currently this recommendation is made for privately placed InvITs. So currently for privately placed InvITs, the trading lot has been set at 1 CR, 1 crore, and for privately placed InvITs which have invested their at least 80% of their funds in completed and revenue generating properties. So for such InvITs, the trading lot is 2 crores. So this SEBI has now proposed to reduce this trading lot from 1 CR or 2 CR as the case may be, 25 lakhs. This will enhance the investor participation. This will make these units more accessible to other investors. This will increase the liquidity of such InvITs. So this is a very welcome change, and this will enhance the participation from the other investors as well. Second recommendation that has been made specifically for InvITs is the alignment of sponsor change provision. So currently, REITs regulation provide that whenever there is any change in sponsor, so the change in sponsor shall mean any change due to entry of a new sponsor with this REIT regulations provide that any change in sponsor shall mean any change due to entry of a new sponsor or exit of an existing sponsor. However, the InvITs regulations provide change in sponsor means any change due to entry of a new sponsor with or without exit of an existing sponsor. So there is this difference between the existing REIT regulations and the InvIT regulations. By reading the InvIT regulation provision, it seems like only the entry of a new sponsor is to be considered as a change in sponsor, and the exit won't be considered as a change. So SEBI has now proposed to align this provision with existing REIT regulations, and the provision will now be changed to the same as the REIT regulations, and the change in sponsor shall mean any change due to the entry of a new sponsor or the exit of an existing sponsor, so that it is in line with the REIT regulations. So that's it for the consultation paper that has been issued for REITs and InvITs.
Yeah. So, Priyanshi, thank you very much. Now, I think Rishi and Ritesh, can we just take up this topic one by one, all these changes? So, Shivam, can you just show the first questions relating to this? Okay, so this is the first issue which Priyanshi has showed. The distribution must be made within 15 days from the date of declaration. So now there are 2-3 questions are in this. So first question is whether the proposed timeline of 5 working days from declaration or completion of the distribution to the unit holder of REIT is appropriate and inadequate. So Ritesh and Pawan, so what do you feel that this particular concept you have brought out, and what are the reasons the industry must have said to you, or some issues are there? Because I have understood you want to make it aligned with LODR because it's also a company pointer. But what are the problems in this, the 5 working days, and why you want to change? And then I will ask Charu that whether this particular changes is good or bad, or what are the things it should be there. Yeah, please.
Yeah. Thanks, Mr. Pawan. So see, this overall issue of timelines, it required a review, because now with this advent of electronic payments and instant settlements, be it IMPS, be it UPI, be it online payments, funds can be transferred instantaneously. And also, if you look at other products, whether it is mutual funds, for example, long back there used to be a timeline of 30 days for a payment of dividends for mutual funds, and now gradually it has been reduced over a period of time. So same way we thought we will review this, and it was also suggested by our working group on ease of doing business to consider this item for review. And we consulted our Indian REIT Association also on the fact. Another thing was the current timelines are prescribed in terms of calendar days, and sometimes prescription in terms of calendar days pose challenge when there are maybe large number of holidays in between, and there are bank holidays where you cannot transact and transfer money to a unit holder. So now we have made the prescription more in terms of working days. One more aspect we have reviewed here is currently the record date can be at a gap of maximum 5 days from date of declaration. So that we have reduced to 2 working days, which will help to squeeze time there also. So with all these things being considered, a timeline of 15 calendar days has been reduced to 5 working days. So that way, even if you assume 2 or 3 holidays in between, so 15 will become 7 or 8 at the end of unit holders. So we have 8 prescribed it more in terms of working days instead of calendar days, and considering that now online payments can happen seamlessly and instantaneously, we have proposed to reduce it to 5 working days. Pawanji, you are mute. Can you check your mic?
Right. So this struggle we have seen in the company law also, and the SEBI other laws also, and now everywhere is a working days are using. When there's a working days. Charu, what do you think this 5 working days concept from 15 do you think it will be useful, or some other things you require as a compliance officer of REIT?
Good afternoon, Pavanji. Good afternoon to all of you. Thank you so much for arranging this webinar. Thank you to the SEBI team members also for attending this. So, first of all, to tell you to go back a bit, this particular discussion had come through IRA also, the Indian REITs Association, and that at that given point of time, we had, internally debated amongst all the REITs and all, and thought that the timeline of 10 working days could be a better proposal in terms of making the distribution in a seamless way and things like that. Now, what has happened is there are 2 things what we are discussing as far as this thing is concerned. First is that whether within 5 working days can the distributions be made, and the second one is whether 2 working days
Charu, you have to unmute yourself.
I'm sorry, I was just getting disconnected. I don't know the reason.
Yeah. Please carry on.
So the 2 major discussion points were that whether it can be done within 5 working days and the record date can be 2 working days. Now, frankly speaking, as an industry, we were not very sure of how this will work, because what happens is if we are fixing record date, so unless and until SEBI is thinking that the record date can be fixed in advance prior to the board meeting date. Now, what happens in that scenario also is that if we fix the record date prior to the board meeting date, maybe keeping in mind the T+1 settlement and things like that, how would it work? So giving an example of say a board meeting getting fixed on 10th of May, and if we fix the record date on 8th of May or 7th of May, would that work? So from our perspective, we were of the opinion that that might be a bit difficult, because what happens is then how does the unit price be estimated depending on the dividend, or rather the distribution is just round the corner to get distributed. So somebody who wants to trade in the unit
how will that happen? So that was something that we were thinking about in terms of, if we fix the record date prior to the board meeting date. Of course, the record date fixing on the same day as the board meeting date is simply not a workable solution. And if we think that the record date has to be fixed once the board meeting has got completed, then again, we have to distribute within 5 working days. So how does it entire puzzle fall into place? Because what happens is finally, because there are so many other intermediaries or, third parties who are involved in distribution, like the RTA is there, the bank is there, the income tax website has to work seamlessly and things like that. So though, in the current scenario, we may say that with the advancement of technology, we are in a situation wherein, we are able to progress much faster. But in case if the technology doesn't work for even 2 hours, we get into a lot of trouble. So that was something which was, running around in our minds. And that is why we still feel that it should be 10 working days and as against 5 working days. So if Mr. Ritesh or somebody from SEBI can just guide us on how can we achieve those timelines, we'll be glad to adhere to that.
Okay, Ritesh, now this is the practical difficulty which she is saying. The point is that you, whenever you are speaking here, it is not the law. Because this is the industry view, so you can understand the problem, or you can suggest some better way out, because she is giving 3 scenario. The before record date is fixed before the meeting, during the meeting, and after the meeting. So she is suggesting that in place of 5 working days should be 10 working day. So Charu, then we will reach to the 15 days, because earlier is a 15 days, so 10 working days.
So the other thought is also, Pavanji, that, as far as SM REITs are concerned, they are currently at 7 working days. Okay, so what was the thought of SEBI recommending this 5 working days also?
Okay.
That was something.
Ritesh, over to you.
Yeah. So thanks, Mr. Bhavan, and thanks, Ms. Charu, for your comments. First, on the point of whether record date can be before the date of board meeting or on the date of board meeting. So record date can lie only after the date of declaration. So if your date of declaration is X, record date will lie only after X, so that market is aware that, okay, after this date, it is going to be traded X distribution. Before this date, it is going to be traded cum distribution. After the record date, there are few steps, as we could understand from your comments. So what we would request is the comment window is still open. So you can maybe either as Nexus or maybe as an association, whichever way it's suited, you can comment on our consultation paper. More importantly, you can highlight what are the steps which exist after record date till the date of payment, and what is your assessment of what is the minimum possible time or in the most efficient manner, how we can crunch the timelines, because if 15 calendar days are kept as 10 working days, so we are more or less there only. With regard to SM REIT, see, the SM REIT regulations were notified very recently, so only like a year back we started working on that, and only like 3-4 months back it was notified. These timelines have been in existence from very long period, so we picked it up for review. Obviously, in future we would want alignment between the two, and the other can also be picked up for review. But we would want comments from all the respondents, including REITs. So you can submit your feedback on our web link, which is there in our consultation paper also. And you can more importantly tell us what are various steps which are involved after the record date and how it can be minimized in the best possible manner across all those steps. The idea is to use technology to have systems in place, because it's a routine exercise. REITs distribute dividends on a quarterly frequency, so there should not be a manual exercise being done again and again. We want you also to upscale and use technology to crunch those timelines. So with that objective in mind, we would want feedback from the industry on the point.
Okay, Charu, what Ritesh is saying, after the program, we will compile all the changes, suggestions. But because you are in this industry, you can directly send and you can pass on to us also simultaneously. So we will incorporate it. What they are saying, because the distribution to the investor and using technology is the best way. Okay, so that can be reduced. But you are right that when you are having a 7 days for SM, then why this 5 days? What is the logic? Let's write to this. Okay.
And the other thing, one more thing I wanted to just add was that this particular, I mean, we are talking about, say, for Nexus Select Trust, at least we are talking about maybe a 300-350 crore distribution per quarter kind of a situation. Now, in that particular scenario, if we even kind of, if we say that we have delayed the distribution, say right now within 5 days and then moving on to another 15 days. So if there is a 7 or a 10-day delay, this is transforming not more than 1% also, not more than even 0.5% also of the amount. So in terms of delay, if you calculate, the amount lying with us or things like that. So, I mean, what would be SEBI's thought on this particular thing is what I was, kind of thinking about. So that is also something which, as a thought, which came to us as to, what would be the thought, because it's not such a substantial amount. Plus, it is getting distributed in the next quarter as it is. Plus, more so because SEBI, as regulations also permit.
Okay. Okay.
As per the regulations also permit that the distribution can be made twice in a year. So if the regulations permit that the distributions can be made twice in a year, as it is, we are kind of, having to distribute only twice in a year. However, I think most of the REITs are distributing on a quarterly basis. So that is something which is there. But I mean, that particular earning, whatever is happening, can definitely be distributed in the next quarter. So, I mean, from a very practical perspective, I would really, want to understand as to how we can circumvent this, because this will put a lot of pressure on the industry. 5 working days is like, the day one you hold the board meeting, 2 days you give gap, and the 4th day then you have the record date. So then you are already on day 3, 4 kind of a thing, plus then getting BENPOS, because NSDL, CDSL will give the entire data to the registrar only the next day after the closure of the, after night 12 o'clock, they will give. Again, RTA will give it to us, the funding file, the distribution files and all of that. And then the bank also takes a day's time. So unless and until there are entire system is, equipped enough to crunch the timelines, how would it work? So that is something which my humble submission is that, that be considered and accordingly the regulation be made.
Yeah,
Please.
yeah, madam. Harni, madam, please.
Yeah. So, see, our attempt, if you look at SEBI and SEBI's attempt to go forward in this technology-oriented scenario, is to crunch timelines and to give the investors as quickly as possible. You would have seen us going for T+1, T+0, and so then we are just going forward in all those things. So there is an attempt to go forward, and given the technology, RTGS is there, and all you have to do is only those people who have traded newly come into the units will be the ones who need their income tax. This thing has to be checked. So you will have, and demat, it's all demat account, you will have to put in place a system. See, now if when we say that we are having 10 days now, when an attempt is made, there has to be an equal attempt from your side also to try to kind of crunch it. Not, always it cannot be that it will remain the same and you have to give us more time. So you when we are trying to do it, so there has to be an attempt, because RTGS is there, NEFTs are there, they're all on. How long does it take for us to do it? Once the system comes in place, it will happen. So we have to try to make it happen. That's my only submission.
No, you're absolutely right. So, Charu, let's write to this our point of view, and what SEBI is suggesting, that we should try to use technology and try to reduce time as much as possible. So let's work out, because things are taking. So now, second question, because now 2 working days that is already covered. So I'm coming to third point: shorter notice of unit holder meeting. Just Charu, Priyanshi, shorter, yeah. So, a shorter notice to unit holder, the current provision is notice for at least 21 days is required for unit holder meeting. So now, allowing REIT other than SM, they can call meeting subject to 95% unit holder consent. Okay, so is it the same way the company law prescribed? That's why, Ritesh, you have brought out this, or some other thought in this?
Yeah, thank you, Mr. Pawan. So this was also one of the recommendations which the EODB working group had shared with us. And as you rightly said, in Companies Act, companies have this option. So if there are any urgent matters and if a meeting is required to be called at a shorter notice, in case of companies also, if 95% of the shareholders are giving a consent for that, companies can call meeting at a shorter notice. So we are trying to align it with Companies Act, and it will benefit the industry as a whole. So whenever there are any urgent matters, and if unit holders are also in agreement, so the biggest check and safeguard here is the unit holders should also agree that yes, it's an urgent matter. And here the threshold is also adapted from the Companies Act, that 95% of the unit holders should agree that yes, it's an urgent matter. So with their agreement, they are the eventual owners of the trust and they are the beneficiaries of the trust. With their agreement, if it can be facilitated, this is how we thought we can balance the requirement and the request we received from the industry.
Okay, I will, Dharani madam, I will tell you one practical. I was a chairman of Secretary Standard Board, and we have done in company law also. Now, when you say 95%, so you are asking in advance confirmation from people. Suppose there is a confirmation has come for 60% people. Okay, so what will happen? You will count the those who have voted, or those, because 40% they are silent. So how will you calculate this 95%? Because as per Companies Act, they are saying if 95% has to confirm, it means 95% people should say, not less people say, and you calculate that those who have replied, that is 100%. It is not counted. So we have to be very clear on this 95% unit holding, not less than either voted or total number, or the clarity should be there.
Yeah.
Okay. Charu, any point in this? This is welcome step.
Can I
Yes,
comment
yes.
on your point on that threshold of 95%, how it should be assessed?
Yeah, tell them, Ritesh,
Yeah.
tell them, because it is
Yeah.
95% of unit
There has
holders.
to be a positive consent from 95% of the unit holders. So in a rare case, if you have not received a consent, let's say only 70% of them have given a consent and 30% have not replied or have not voted, then also that positive consent is not achieved. You will have to get a positive consent from 95% of the unit holders.
So there is 100 unit holders. So 95% unit holder has to confirm. Then
Yes.
you will.
Yes. If somebody has not voted, then there is no positive consent. If somebody has said no, then there is also no positive consent.
Okay. So when you are coming out with the final language, you can just take
If you are calling a meeting at a short notice, only when the beneficiaries or the shareholders or the unit holders in this case are agreeable to that fact, then it can be facilitated. So there has to be a positive consent from minimum 95% unit holders.
So the question over there is not less than 95% of unit holders entitled to vote. So it is the full number of holders. So
Yes.
the question is very specific. So it says that it is 95% of the unit holders entitled to vote.
Yeah, that's clear. Now, next, Priyanshi, this is a disclosure and review of the investor complaint. So, statement must be reviewed by the board before submission to stock exchange within 21 days from the end of the each quarter. That is there. And LODR is talking something else. So, they have aligned. So, now the question is whether the proposal of aligning the provision for submission of review of the statement of investor complaint with LODR is appropriate and adequate. So I think SEBI has given this thing. Charu, do you think this is appropriate and adequate on?
Yes, absolutely. Absolutely. So this is something which is absolutely adequate. And in the sense that we are really very happy to have this kind of shift and change.
Priyanshi, you have any point on this? This is good.
Yes, sir. This is a very welcome change because just as I explained earlier, the managers were very confused that whether they should hold the meeting twice. It was very difficult for them to hold the meeting twice, one for reviewing the statement and then for approving the financials. So this is a very good change.
So Ritesh, I think this is good. Anything you want to add? Otherwise, we can move to next question.
No, so we thought it will also bring alignment with LODR regulation. So this is the fact, the requirement for listed entities also.
Yes, absolutely right. Okay, next is disclosure of deviation. So this is submit a statement or deviation within 21 days from the end of the each quarter. Now you want the submission of deviation along with the publication of quarterly financial results. So the question is whether the proposed provision of submission of statement of deviation and variation to coincide with the date of publication of quarterly result is appropriate and adequate. So what is the logic you people have suggested? Ritesh, I'm asking you.
Yeah, thanks, Mr. Pawan. So at present, the requirement is this disclosure of statement of deviation has to be given within 21 days. Now, we received one of the recommendations from the working group, which was that the financials are generally required to be disclosed within 45 days for quarterly financials and within 60 days for the last quarter and annual financials. And this statement is in a way linked with financials. So until your financials are final and completed, so at present to meet this compliance requirement, they are preparing this statement ahead of time, and it is getting reviewed and audited, and then they are meeting this compliance of 21 days. Further, we realize that in LODR regulations, the timeline for submission of this statement is aligned with the timeline for submission of financials. So given this feedback and given the requirement for LODR regulations, we thought that we can also propose to align this regulation, this requirement with LODR regulations, and we can also align the timeline with the timeline for submission of financial statements.
Okay. So Charu, this is welcome or anything you want to add?
No. This is also absolutely a welcome proposal, Pavanji. This is something which is, helping us to have less compliances as against, like how Priyanshi was mentioning earlier, that holding 2 meetings and things like that. So this is
any experience, any problem you want to suggest something in this?
No, sir, this one is just as Ritesh sir correctly mentioned that this is linked to the financials. It contains the financial information, and it was very difficult at first to collate the information related to fund utilization within 21 days and finding out the material deviation and then working on the financials again. So this will now be a one-time exercise instead in place of doing it twice.
Okay. So come to the next clarification of voting threshold. Now this is very interesting and this is very confusing also, in that more people vote in favor must exceed vote against. Vote in favor must be at least 1/5 times of the vote against. This is the present position. Now they are saying voting count shall be in percentage term instead of proportionate terms. Voting count shall be in percentage term instead of proportionate term more than, and the voting threshold shall be calculated based on the person present and voting, since the same is aligned with the intent of the current regulation. So my immediate quick point is that always the decision is on the basis of person present and voting. Suppose, and this is also decided case in company law now, that if somebody is not coming for the meeting, it means he's not against or he is not in favor, but he is not participating. It means that he is giving his mute consent for whatever you are doing. So what is the logic behind which you are suggesting alignment or something else?
Yeah. So this is more of presenting the same requirement in percentage terms instead of ratio terms. So today also the requirement is, let's say if you have 100 unit holders and if let's say if 60 of them are voted, so the number of people who have voted in favor should be more than those who have voted against. For the second bullet, for the first bullet, the requirement is number of people who have voted in favor should be 1.5 times, at least 1.5 times more than the people who have voted against. So let's say we are talking about the second bullet, more than 31 or more should have voted in favor. So same thing now we are prescribing in percentage terms, which is more intuitive to any user. Even for the first case, if 60 people have voted, so 40 should have voted in favor, more than 40 should have voted in favor, and 20 should have, sorry, not 40, 1.5, whatever the number is, 36 and 24, if I can calculate it correctly. So 36 should have voted in favor, more than 36. So again, we are prescribing it in percentage terms. Since we are prescribing it in percentage terms, then there is an explicit requirement of mentioning the fact present and voting. However, in the current way, the way the regulation is drafted, there is a clear understanding that this has to be checked on the basis of present and voting only, because people voted in favor are being compared with people voted against. So those who have abstained are not there in this equation. Only people voted in favor are being compared with people voted against. Another thing which we are proposing as part of this same review is that to encourage more participation of unit holders, the REITs and InvITs should give an option to attend meeting virtually. So either it can be a full virtual meeting, or if it's a physical meeting, there should be a hybrid mode which should be adapted. So if somebody who cannot make physically, at least the unit holder will have an option to attend online. Second thing is, we are saying that e-voting as an option should be given to all unit holders. So if somebody cannot physically go and vote, he can at least cast the vote through electronic means. So that will probably help to achieve wider voting participation. So the number of people who have abstained maybe it will go down substantially with this wider participation. And anyways, the threshold will be checked based on people present and voting, which is the current intent also, because the comparison is between people voting in favor with people voting against.
Okay. So, Priyanshi, just show the first questions of this. So now, whether the proposed requirement of stating voting count is percentage term 60-50 instead of proportionate term is more appropriate and adequate. So Charu, I think what Ritesh is saying and what SEBI is proposing, the 1.5 times can create confusion. It is clearly should be in percentage terms, number one.
Absolutely.
Okay.
We agree.
Number two, next question you go, Charu. Then whether the proposed explicit clarification that the voting threshold shall be calculated based on person present and voting is appropriate and adequate? Answer is yes, because I have just told you that you cannot take everybody together. So this is the present. Now, meaning of present, that is coming into second question. Next question. So you are saying whether the proposed requirement of REIT and InvIT mandatorily provide the option for unit holder to attend the meeting through video conferencing or other audiovisual means is appropriate and adequate. So point is, as per the law now, it is allowed that the shareholders and unit holder now can participate through video conferencing. So you follow video conferencing, and anybody who's participating in video conferencing or you are having physical both meeting should be calculated now on the hybrid basis, which is court is also doing. Next question, whether the proposed requirement of providing remote e-voting facility to be unit holder for all unit holder meeting is appropriate and adequate. Now, if you see in company law, they have provided that you can have your e-voting, your e-meeting for all cases except few things. And then in the corona also, they've allowed that also. So now the question is, if I can summarize all the 3-4 questions which are there. Now, one is, there's a one point which you can follow, which is in the company law, that you are saying 1/5 1.5 more than 1.5, it means that you are creating something, so it should be percentage. Now, second is for all resolution you are saying, because as per the regulation of REIT and InvIT, you have to pass unit holders' consent. So in all resolution, you want this percentage, or you want to do something which is in company law, like special resolution and ordinary resolution. So you also create this type of thing, that for these things you require normal ordinary resolution, mean 50 plus 1 vote. Okay. And a special resolution where they have a categorized 2/3 majority. So why can't we do the same thing here also, that in place of doing this, we can divide into two parts, ordinary and special resolution things, and that concept should be there. And you include both hybrid basis, that unit holder can come physically also, and they can join as a hybrid mode also. Now there is a discussion has taken place that whether we can make it a compulsory, that everybody has to participate compulsory. That is against the interests of the investor, because so many people are old and they don't have this facility, or they don't want to do this. They want to come personally. So you have the hybrid system, that is number one. Second, you should make the system in percentage term or a time term, but it should be divided into two parts. For all resolution, you require this percentage. That may not be possible. This is my view. Charu, you want to add something? Then
or maybe
yeah.
Yeah.
Charu, you have any point? Then Ritesh.
No, I think Mr. Ritesh can take this.
Yeah, Ritesh, you please.
So only on that limited observation of ordinary versus special. So if you look at REIT regulations and InvIT regulations, the regulations clearly have multiple thresholds, and two most major thresholds are 50% and 60%. There are some transactions which have higher thresholds also, but maybe for sake of avoiding confusion, we will not get into that discussion. But a bigger list is 50% for ordinary kind of transactions and 60% for slightly more significant kind of transactions. So we also have two different thresholds. The prescription is in ratio terms for both the thresholds at present, and we are proposing to prescribe it in percentage terms instead of ratio terms.
No, but when you say votes in favor must exceed vote against, in favor must be at least 1/5 time of the vote against.
So 1.5 times is 60% only. Like 1.5 will be achieved only when 61% are voting in favor and 39% are voting against.
But it means you are saying that wherever threshold limit is 50 and more, and other percentage, both have to follow the same way?
No. So wherever the current requirement is vote should be more than vote against, we are proposing that we will prescribe it in 50% as a number rather than this ratio. And wherever the current requirement is votes in favor should be 1.5 times the votes against, we are proposing that instead of prescribing it in terms of ratio, we will say 60%. So for both the respective sub-regulations, the list will stay as it is, but the number will be 50% for one sub-regulation and 60% for the other sub-regulation.
Okay, so clearly, I think you must follow what the company law provides and what the LODR is provide for the voting. You have a hybrid system you can do, and simultaneously the percentage terms will be the best way, so there is no confusion in this.
Yes. So our proposal is also on the similar lines.
Yeah.
Yes, so I think we also are very much okay with this.
Harni madam, you want to say anything on this?
No, not required, sir. You
Okay.
can carry.
Okay. Next is maintenance of record in electronic form. So manager must maintain records in physical form, electronic forms allowed for trustee. What you are saying, to allow the maintenance of records in electronic form along with the backup and disaster recovery. I think this is as per the other laws. So I don't think anybody has any problem, and there's a clarification you have given. So it is better. Whether the proposed amendment allow the maintenance record in electronic form for both manager as well as trustees appropriate and adequate. I think this is the right suggestion, and it will be useful, because now everything is going in electronic form. So there's no problem in this. Charu, your point in this?
No,
Because-
this is absolutely fine. I mean, this is something which is an enabling provision, so we are quite okay with this.
Okay, next question is the backup and disaster recovery. Whether the proposed norms of data backup, disaster recovery for record maintenance in electronic form are appropriate and adequate. I think both are in affirmative way. Charu, Pranshi, you have any point on this?
No, sir, this is just in line with the IT Act only, the Information Technology Act. Now, when we are required to maintain certain records in electronic form, so we definitely have to follow the IT norms for backup and disaster recovery as well.
Okay, so friend, these are the questions which are connected to both REIT and InvIT, but some proposal is only connected to InvIT, which question like reduction of trading lot. So I am just coming this. Earlier it was set to 1 crore or INR 2 crore for certain investment, which they want to reduce to INR 25 lakh. So Charu, before coming to your thing, how much it will come? So Ritesh, what is the recommendation of the industry and why you have reduced to 1 crore to 25 lakhs? Why not 1 lakh? Why not? So what is the reason?
Okay. So see, firstly, I thought I'll just explain why this proposal is only applicable for InvITs, because in InvITs there are two possibilities. A, an InvIT can do a public issue and get listed. B, an InvIT can do a private placement and get listed. So when you do a public issue, you do an IPO kind of transaction, which will be open to world at large. Anybody who has a trading and demat account can apply and they can participate. So you send invitation to everyone. When you do a private placement, you privately reach out to some prospective investors, and only those entities who are invited, they can participate. Now, for private placements, if they are doing, the lot sizes are different, because the regulatory intention is only sophisticated investors should be allowed to participate for the private placement transactions, because even in terms of asset mix and investment restrictions, there are slight differences between privately placed InvITs and publicly placed InvITs. So they can have more of under construction exposure, for example, and there are other things. So when the regulations were initially brought out in 2014, the numbers were, as you can see on screen, for secondary market tradings, 1 crore and 2 crore, depending upon the asset mix. Now we are sitting in 2024, and there are more than 8 to 10 entities which have done private placement and got listed. And there are many institutional investors and ultra HNI investors who are holding units of those InvITs, those privately placed InvITs. Now, maybe to facilitate wider participation for those privately placed InvITs, this number is being reviewed, and it was also part of the recommendation of the working group on ease of doing business. If I can just draw a comparison, even for publicly listed InvITs or maybe REITs where only public issues can be done, when we came out with regulations back in 2014, the lot size was 2 lakhs. For InvITs, some cases the lot size was even higher. But gradually, with more maybe awareness on these products, more investor investing in these products, we have now brought the secondary market lot to 1 unit for both REITs and publicly placed InvITs. So there also it is gradually reduced to have wider participation among investors. So this is more a similar kind of approach for privately placed InvITs. As far as number goes, one can argue that this will be more or less, and we will also look forward to public feedback on that number. But the main principle behind this is to gradually have wider participation among investors. So we are proposing to reduce it to 25 lakhs with that intention in mind.
Okay, but this 25 lakh rupees, there's 25 lakh rupees which you have suggested. Suppose you reduce this. So do you think more and more investor will come, which are, because today 5 lakh, 10 lakh rupees, when you say small investor, so a small investor is always be considered less than 2 lakh. But anybody who is more than 2 lakh is always, we presume that he is not a small investor. So if we reduce this target to say 5 lakh or 10 lakh, then more investor can come, because if I have to invest in this instrument, which is alien for me, which is not very popular, and that is also 25 lakhs. So only big investors will come, institutional investor, not the public at large. So if you want to attract, you can make it 5 lakh or 10 lakh rupees. That can be a...
Okay. So for retail investors, presently they can invest in publicly placed InvITs. So there are many publicly placed InvITs like Power Grid, India Grid, and many others. So they can invest in publicly placed InvITs. There the lot size is 1 unit. For privately placed InvITs, we are reducing it. So
Okay.
now it is 1 crore/2 crore, and we are proposing to reduce it to 25 lakhs. And only future will tell whether it can be reduced further or not, how the investor base develops in future. Even for REITs, when we brought it from 2 lakh to 1 unit, it was not brought it at one go. It was reduced in a graded manner. So from 2 lakh, we went to 50,000, and then we have brought it down to 1 unit. So this is more of a direction kind of approach. We want to increase the investor base, and currently we are proposing it to reduce it to 25 lakhs. And we have to appreciate that these are privately placed InvITs. So, so we have to balance that way. However, as far as disclosures and compliances are concerned, all the disclosures, they are also required to make all the compliances. They are also required to follow the way publicly placed InvITs are following. So we are trying to balance it somewhere, that we are trying to have wider investor base. At the same time, we are trying to reduce it to a reasonable number to begin with.
Okay. So, Charu, you are in REIT, but InvIT is not far ahead with this. You have any point in this?
Yeah, I will just I will just want to say that this
Yeah.
seems to be a good change, because with this, as he rightly said, that this will create a lot of more liquidity in the market and things like that. So I think this is a good enough thing, and plus with the background of first earlier getting into 2 lakh and all of that, I think this is a good change that I'm sure that the InvITs will be happy with this kind of a change.
Okay. So I think Priyanshi, these questions are over. Can we go to, yeah, this we have already discussed. Okay. So now these are the questions which has come. Charu, any other things which you think in REIT is not covered or it is unanswered?
No, I just had one query, in the sense that we were talking about this investor grievance and all that, meetings not being there, board meetings, but it will have to be run through the trustees, and we'll have to take their confirmation as we have been doing, right? So that is what the intent is.
Okay. Pritesh, any other point in the REIT you want to say in REIT and InvIT?
First, I'll react to what Ms. Charu mentioned just now. That is with regard to statement of investor complaints,
Yes.
right?
Yes.
So what we have proposed in the consultation paper is that review by trustee and review by board can happen post submission also. So it will be reviewed by investment manager, or investment manager can delegate it to their board or any committee, whatever process you are following at present. And then board level placing it for information of board and information of trustee can happen post facto also.
Oh, very good. Fantastic.
Yeah.
Okay.
Thank you.
Okay. So now we have completed the these questions on REIT. Now I'm coming to the second part is NCS. So Charu, are you ready?
Yes, sir.
So just show your thing. So these are the another point. Consultative paper is talking about the non-convertible securities. So what is non-convertible security? What are the covered bond, non-convertible instrument, and what are the changes SEBI is proposing? Let's discuss this. So Charu, just
Is my screen visible?
yeah, go to slide
Yes.
2. Rest is okay.
So good evening, everyone. So in this part of the webinar, we'll be covering the NCS consultation paper on the NCS regulations.
So moving forward, uh, let us first come on the first discuss the applicability and what is NCS, what are debt securities. So, firstly, what NCS regulation? What is the applicability of NCS regulations? So, NCS regulations are applicable on commercial papers and non-convertible securities. In commercial paper, constraint it focuses only on the listing. For NCS, it covers the debt securities and NCRPS, that are non-convertible redeemable preference shares, their public and private issuances and listing. And for the other, the perpetual non-cumulative preference shares and perpetual debt instruments or any other instruments that may be SEBI may specify their private issuances and listing. So, as per the NCS regulations, non-convertible security means the debt securities, the non-convertible redeemable preference shares, the perpetual non-cumulative preference shares, perpetual debt instruments, and any other instruments that may be specified by SEBI. And in this, the what does we mean by debt securities? The NCS regulations also define debt securities. So debt securities are basically those are non-convertible debts which have a fixed maturity period. These include debentures, bonds, or any other security which will be without charge or with charge. But there are certain exclusions, which are security receipts, securitized debt instruments, money market instruments, and bonds. So this was all the basic about the NCS the debt securities. Moving forward, why should we go for non-convertible debt instruments? There are two perspectives to this. One is the company's perspective. From company's perspective, there may be some advantages which we have listed here is the fewer compliance requirements, enhanced visibility, no equity dilution. There can be the funding source becomes diversified, and there is it seems to be cost effective financing. And from the if we see from the perspective of debenture holders, so for debenture holders, it provides liquidity to the investors, the better returns and fixed tenure. There is a security, then there is diversification in the portfolio of them, and a bit less risky, we can say. So, moving forward towards the consultation paper, uh, these are some of the listed NCD issuance. These are some recent ones. Of the Power Finance Corporation, 5,000 crore debenture issue. Then Chola Mandalam Investment, Piramal Enterprises, Aditya Birla, and IIFL Samasta. And there are many more coming these days. So, finally, coming to the consultation paper, which has been issued by SEBI on the NCS regulations. So, what the SEBI has formulated some working groups which have further given its deliberations with the Corporate Bonds and Securitization Advisory Committee, and which has finally come up with a consultation paper for the measures towards ease of doing business for the NCS. So let us first discuss the first suggestion they are coming up with. It deals with the deletion of certain disclosures in the offer document. So currently the schedule to the NCS regulations prescribes that the certain disclosures regarding the promoters of the company, which includes the personal address, PAN, and business and financial activities of promoters. So this leads to disclosure of a lot of information of promoters in the public domain. So it has been proposed to remove the requirement for disclosing the personal address and PAN of promoters in the offer document, and add the same to the declaration clause, where it is declared that all these documents along with the driving license, the passport, and every documents have been submitted to the stock exchanges along with the prospectus. And after due deliberations, it has been decided to retain the requirement of disclosing business and financial activities of promoters in the offer document, just so that investors are well informed about who the promoters are and what they are proposing. So the next recommendation in the consultation paper is regarding the disclosure of the time period for the key parameters. So currently the regulation specifies that the company has to disclose the standalone and consolidated financial statements of the company for 3 complete years, and those shall not be more than 6 months old from the date of the issue or the issue opening date. And the other thing which we have to disclose is the key operational and financial parameters. But for that, no specific time period has been prescribed in the NCS regulations. So just to align the provisions, the proposed change which has been which has come is that these key operational and financial parameters shall also be disclosed for the completed years, and for the stub period, if those are the last financial year 6 months old, from and for if they are complete, then last 3 years financials we have to give. So moving on to the next recommendation. So currently we have to disclose the details of branches or units in the offer documents. So there may be cases that company has n number of branches or the units from from where it operates. So to curtail the lengthy disclosures in the offer document, it has been proposed to provide the details of the branch and the units via QR code and web link in the offer document, and these details shall be submitted to the debenture trustee instead of disclosing all the details in the offer document, and shall be made part of the inspection documents. Also this item should be added in the checklist in under the head security and covenant monitoring system, and this should be confirmed by the debenture trustee. So moving forward, with regard to disclosure on project cost and means of financing. So currently Schedule 1 of the NCS regulation, it says for disclosing of project cost and means of financing disclosure for the for new projects in the offer document, and these disclosures are also there to be mentioned as per the schedule 7 of ICDR regulations. These there are certain points which are to be mentioned as per the ICDR regulations, that are the how to use these proceeds, what are the purpose for which it is taken, what is the breakup cost, what is the means of financing and deployment status. So to bring parity in both the regulations, it is proposed to align the disclosure requirements of the ICDR regulations with that of the NCS regulations, and specifically focusing on the proposed use of proceeds. The next recommendation pertains to the relaxation in providing certain details in regard to the immovable property transactions. So there are many details which is provided in Schedule 1 for each of the vendor in immovable property transactions which are required to be mentioned. So to curtail those lengthy disclosures, they have proposed to they have proposed some changes, which are that earlier we used to write about the all the vendors of the immovable properties, the details of the advance given to them, and the nature and title of interest they have. So now they have proposed that only the top 5 vendors based on the transaction value shall be detailed in the offer document, and information on other vendors should be should be provided via QR code and web link. And like the earlier recommendation, the same shall be made available for the inspection, and added under the checklist item security and covenant monitoring system. So moving forward, the in the
Charu,
NC,
Charu,
yes,
you have to just fast because we
Yeah.
have
yes,
just,
sir. Yes, sir. Yes, sir. There is a provision in the NCS regulations wherein all directors have to attest the declaration regarding the compliance with various acts and regulations. So various NBFCs and PSUs have come with private placement of NCDs in a very frequent manner. So and it is not possible every time to get the declarations attested by all the directors. So to curtail this difficulty, there has been the change has been proposed to allow attestation by the senior management by any of the following: chairperson and compliance officer, or MD, or MD, CEO and compliance officer, CEO, CFO or and compliance officer, WTD and compliance officer, or jointly by 2 of the KMPs. However, in this regard, we are required to make a declaration that the final and ultimate responsibility of the contents of the letter of offer should be of the board of directors of the company. So moving towards the has changed, wherein it has been recommended that modification of timeline for payment obligations. So in this case, for the convertible securities, it mentions that within 1 working day of the submitting the payment obligations, that whether it is interest payment or a principal payment, we have to make the disclosure to the stock exchange. And for commercial paper, the provisions provide 2 days. So to to align these, so the timeline are proposed to be aligned, and the listed commercial paper, the status of payment obligations for the listed commercial paper shall also be made within 1 working day of the payment becoming due. So that was all the changes with regard to the
okay, Charu,
NCS.
thank you very much. Shivam, just go to this. So Rishi Barua, Pawan Chaudhary and Kiran Dambre will give the answer of this. So I will start with first deletion of certain disclosure. So Harni Madam has informed about the privacy, but any other thought which has come, whether the proposed regarding removal of disclosure of pen of the promoter of the issuer from the offer document is appropriate and adequate. So what is the thought behind this? Anybody can give answer from this. Kiran, can you just tell us? Kiran or Rishi and Pawan?
So this was one of the recommendations which our working group has submitted to us. And since this information was already available with the stock exchanges, so whenever it is required by the regulator, we can extract those information. So we thought that this is not required to be disclosed in that. And any other details which are actually required for the investors to make an investment decision into the debt security, that is already disclosed in the offer document, the image.
And second, you want that public should also not, because if you are giving public document, and everybody will know the PAN number of that promoter, and they can misutilize also.
Correct. Yes.
Okay. Next is deletion of this. Whether the proposed regards removal or disclosure of personal address of the promoter, that is also on the same line.
Yeah. Since Aadhaar card and everything, all KYC documents are submitted to the stock exchange, so it was not required to be known at the public at large. And at a regulator level and stock exchange level, this information is already available.
So if I can see this, I can get DIN number from a person's from this ROC side, and then these numbers which are there, I can multiply, and then few question I will ask that person, and I'll get his bank account. So that is the fraudster are doing nowadays They are asking various questions. So I think this is a good move, which is creating a better personalized information is intact, and whatever information you want, you can extract.
Yeah. So this is starting now. There are various ways, GST website and all, people do many ways to get the information. That's
But
a
do
good
you think investor requires any of the information?
That's a
Financial activities.
so business and financial activities that we have retained, which was said to be disclosed. So that actually investors would like to have that information at their hand to in order to get investment, whether we need to invest in that particular securities of that company, what all he is doing and all things. So that information we have written, and other personal information things we have deliberately removed from the offer document.
Okay. Next, Shivam. So time period for key parameters. So no specific period for disclosure of key operation and financial point, which you are not saying. 3 completed year, not more than 6 months old, which is part of the LODR also. So in the same line. Go back. So whether the proposal of aligning the time period of key and operational parameter line with the period of disclosure of financial parameter in the offer document is appropriate and adequate. Why this concept is required? Is there anything, or do you just want to alignment?
So this is we have been receiving many queries regarding this. Although our intention was clear that whatever financial information you have disclosed, that statement of key and operational and financial, because these information will be extracted from the financial document which has been uploaded in the disclosed in this offer document. So in our intent we are clear, but since we are receiving many queries and even the working group has recommended that it's better to clarify than to give clarification on one-to-one basis. So we thought of introducing and giving a special clarity in the regulation itself.
Okay. So next is a detailed information about all branches, unit must be listed in the offer document. That is the earlier law. Now you are saying you are giving a QR code web link, submit detail of the debenture trustee and checklist from the security convenient monitoring system. So why this law, and then what is the meaning of the security and convenience? So first question is whether the proposal of disclosing detail about branches, issues at the date of the offer document in the form of QR code and web link is appropriate. So do you think that those who, what is the thought behind this?
So the thought behind is that nowadays there are many issuers whose branches run into like thousands or more than 100. Now to reduce the size of the offer document, because if someone wants to access it should be clearly accessible from the QR code and the website address where it is already hosted if they want to, because the offer document should not run into 10 or 50 or 60 pages only showing the list of the branches. So if anyone is keen into, they can just scan that document and then go into the website and see the document. To reduce the size of the offer document, this particular measures has been proposed.
And second is in this instrument, majority those who are informed people are investing. So I think this is a right move in this. Next question, that is whether the proposal of specifying detail of all the branches, unit, issue as the date of the offer document may be provided to the debenture trustee and also kept available for inspection as Schedule 1 of the NCS regulation. I think this is everywhere, that some information you don't want to give because of the bulkiness. Second is you want to give this information, so anybody who is interested, he can go. But the only thing is practicality. If I want to go, I have to go personally to that place, or some other solution is also there. So to do the inspection, I have to go personally to the office of the company or debenture trustee, whatever it is.
So this information will also be available with the debenture trustee. So the investors can seek that information from the debenture trustee itself.
So my question is, I have to personally visit to get the information.
So if you want to see the information physically, then you can visit that inspection. But if you just want to have the details, you can get it from debenture trustee. So the idea is to have the independent third party should also have this branches information which is given by QR code. So you can get that from debenture trustee.
Yeah,
And
yeah,
also
but-
it is available in the QR code. It is not that it is not available. If you are able to scan the QR code, you will get the list completely. In
Okay.
addition, you want any more details, then you can either approach the debenture trustee who will have the details, or go in the document for inspection. You will have to then take the pains to go and you get the details. Only it's very specific or very rare people will want to do that. So
Okay.
for that we have kept.
Say it's like an option given. It's like an option to the investor. So either he can go to the physically to the office of the entity, or he can have that QR code and web link. So it's up to the option. So it's a like he can have a choice what to do.
Okay, now this next question is very interesting, and there is a new concept. Now come to there is a security and covenant monitoring system. So what it means and how this is how this will be useful for anybody.
So this actually what we have done in this is see, there is a system which is now in place where once the debenture gets issued, even before it is listed, all the charge and all the other requirements that are present need to be made, have to be registered with the in the securities and covenant monitoring system, in which which is actually set up by the depositories, and they have the system whereby all the parties to the debenture issue are synced into the system. So there will be a checklist whereby unless the checklist is ticked in all respects, then the listing of that instrument may not be possible. So what we have done is, as a checklist, now we have now provided, we are taking out from the bulk of the instrument the actual addresses of the branches and details of the branches. We have put it as a QR code. We have put it in the document for inspection. Whoever wants it can go and see it. Along with the information will be provided also to an independent debenture trustee who is taking care of the interest of the investors. And along with that, we are putting it in the checklist for in the securities and covenant monitoring, unless the debenture trustee actually ticks the box and says that these things are already present in wherever form, whichever form they are supposed to be there, then only it will complete the covenant monitoring system, after which they will get the listing of the instrument. So we have actually tried to cover up the whole this thing, so that it is not lost somewhere. Information is not lost, and the issuer will have to provide it in some way or the other. And while we are doing an ease of doing business for the issuer, you have to see whether these things are available in other places accordingly. So that is why we have put this system.
Okay, okay. Now this is welcome thing, and this definitely will help. Okay, next, Shivam. The now Schedule 1 of NCS regulation mandate project trust and means of finance disclosure of new project. Now you are proposing Schedule 7 of ICDR type thing. Yeah, go back. Go to the question. So question is whether proposal of aligning of the provision of Schedule 1 of NCS regulation regarding disclosure about project cost and means of finance with clause 7 of Schedule 7 of the ICDR regulation, which provide detailed disclosure about the use of proceed is appropriate and inadequate. So why the need of changes? Because this is something different. So why you want to align with the ICDR regulation of this?
So ICDR regulation provided a comprehensive view of how the funds will be used. So in order to maintain parity between both the regulation, so we have included those things, because ICDR had the more detailed disclosure than what we had proposed in the NCS regulation. So we have brought in that thing from the ICDR.
Okay. Next is relaxation in providing certain details. So you are saying extensive today is the required for each vendor is immovable property transaction. So now you are suggesting top 5 vendors provide with QR codes, submit branch detail, checklist item of security is providing. So these are the suggestions you are giving. So whether the proposal of determining a top 5 vendor is sufficient, this should be on the basis of value, sale consideration payable to the vendor is appropriate or adequate, or you want to think that top 5 vendors mean those who are big vendor, or they are the supply the goods on that basis to that company is sufficient. So if you ask me, 5 vendors sale consideration is perfectly all right, but what is in your mind?
So this is regarding the acquisition of immovable property. So in that case, if you have top 5 entities from whom you are acquiring the immovable property, in that case, you will have to give basis the sale consideration of funds that you are using for that. Others you can give on the aggregate basis. So it's not the vendor on a continuous basis. It's the funds if you are using for the acquisition of immovable property, that I think so will be limited to 5, or if it is more than 5, you can give on an aggregate basis.
No, tell me, suppose I am buying something from the vendors. So you are talking about the sale consideration payable of that particular year or cumulative of that? Cumulative or last year's?
Sir, it is like in case the proceeds for which you are raising the funds, if that proceeds you are using for purchase of any immovable property.
Yeah.
So let's say you are purchasing from 10 or 12 vendors.
Okay.
In total. So out of those 10 or 12, who are the top 5 vendors you will determine on this basis. For this top 5, you will give a detailed disclosure. For the remaining, you will just give a total figure.
Aggregate basis.
Yes. Earlier the requirement was to give the details for all the vendors.
Each vendor,
Yes,
even
for
if
each
it runs into 100 vendors.
Yes.
No, I think when you are finalizing this, then you can explain this in a better manner. It will be because when I'm reading this, 5 vendors is okay. Sale consideration is okay. But cumulative or that years, if you can just explain, that will be useful.
Okay.
Next.
Yeah.
So this is relaxation providing certain details, whether the proposal of specifying that details of the remaining vendors may be provided by way of QR code and web link in offer document. Further, the said details may be provided to the venture trustee and also kept. I think this is same on the same line. You are giving complete detail through QR code, but top 5 vendors you are giving in the
Offer
document. That's absolutely right. Next, whether the proposal through which checklist item of the security and covenant monitoring system where the issue or confirmed provision of the information to the debenture trustee and debenture trustee confirm receipt of information is regard to appropriate and adequate. I think this, the way Hari Madam has explained, I think this is perfectly all right, and that will give more security, and the monitoring system will be more effective in this way.
Correct. Yeah.
Any other thing you want to say?
No, this is the same system. So it's just that we want to ensure that when the debenture trustee receives that information, he confirms the receipt on, and that is recorded in the system. So in any case, tomorrow, if there is an argument, there is already a system wherein the issuer says that, yes, I have sent the information, and debenture trustee has confirmed that he has received that information on a particular date, and that is captured in a database as a secured, and it can be accessed at any point in time.
Perfect. So last 2 questions, flexibility in attestation of offer document. So this you are saying all director must attest, that is the earlier law, but now you are allowing attestation by senior management by way of following. So the question is whether the proposal of attestation of declaration specified NCS regulation by way of following is appropriate and inadequate. So I think the last point, jointly by any 2 KMP, that is perfect. And if you can do one more thing, some information are financial, some information are non-financial. So if you can make it that any 2 of the KMP, and if the financial information, then CFO's sign is must, that you can do this type of thing, it will be better, because sometimes people take advantage. They say that it's a financial information, it is missed out. So if you can make it like this, it will be jointly by 2 KMP, that is perfect. But if financial information, it should be 1 KMP should be CFO.
Yeah, that can be looked into by post the feedback what we have received. Anyway, the whatever disclosure is made in the offer document, that the total content is responsibility of the board of directors. This is just for the attestation what we have provided, but the feedback can be thought of after once we have received it.
But in the prospectus, when you are filing, then all the director has to sign. So here you are giving this exemption. Any rationale behind this?
Yeah, so we've been receiving the feedback that most of the time directors are not available, they are not present, they are out of the country and all, and it becomes difficult to comply, and it delays the whole process of issuing the offer document and raising the funds for the corporate. So in order to ease that doing business, we have provided this 5 alternative wherein they can do the attestation and they can go ahead with the issuance process.
See, actually, it is the difference between equity raising and debt raising. Debt raising is immediate. So they keep raising it on a continuous basis. So whatever is required. So equity raising is not like that. It happens in a more planned manner. So people are available to sign the prospectus and all that. But here you need to immediately do it. They most often corporates they think, and then within a couple of days they raise the funds. So then it delays when if we put all these things. That is basically why we have thought of this.
Perfectly all right. I think it is clearly mentioned. So last point is submission of status within 1 working days for non-convertible security, 2 working days for commercial paper. This you have aligned with LODR. So go to the question, Mr. Shivam. So whether proposal of aligning the timeline for intimating of stock exchange regarding status of payment and interest, repayment of principal of listed company, listed commercial paper with regulation 57 of LODR within 1 working days of the payment being due is appropriate and inadequate. So I think this 1 working days, why not 2 working days? Because you have earlier 1 and 2 both. So why not 2 working days? Why 1 working days is proposed?
So it is the 2 days, not the working days. So considering it was being difficult when we say 2 days, it might happen there are continuous holidays of 3 days or something. So in order to align, and 1 working days is more practically feasible from a corporate side. So we have aligned that. We have made it 2 working days instead of the calendar days.
Okay. I think one question has come. 1.5 times board prescribed to make changes almost impossible. Purpose of these trusts are predetermined. So I think this answer we have already covered percentage term. Okay. Yes. So I think we have covered all the question, all the points. Now I will request Shivam to just quickly show the poll results also, which we have done for all questions. Shivam, are you ready? Shivam, are you ready? Yeah. So this is we have done the poll during this. So first is whether the proposed timeline of 5 working days from declaration of completion of and distribution of the unit holder is appropriate or adequate. 38% is say yes, and 62% say no. Okay, this poll we will share with you. Whether the proposed timeline of minimum 2 working days for intimating record date to stock exchange appropriate. 52 say yes, 48 say no. Whether the proposed condition of calling shareholder, that is in 95% that is yes, and 19% no. Next, whether the proposal of aligning the provision of submission of review statement and investor complaint with LODR, 95% say yes. Then whether the proposed provision of submission of statement of deviation, that is also agreed. 81% people are agreed. Next, whether the proposed requirement of stating of voting count in percentage term is appropriate. That is also in place of earlier. 86% people are saying yes, and then 14 no. Whether the proposed explicit clarification on voting threshold shall be calculated based on the person present and voting is appropriate. Yes, 71, 21%, 29% say no. Next question. Whether the proposed requirement of REIT and InvIT mandatorily provide an option to unit holder to attend the meeting through video conferencing or audio visual, appropriate, 86% say yes. Whether the proposed requirement of providing remote e-voting facility to unit holder for all unit holder meeting is appropriate and adequate, that is also 95% people are saying, because now people have tested the e-voting advantage, so they are also in favor of this. Then next, whether the proposed amendment of allowing the maintenance of record in electronic form, that is also 95% people are in favor. Whether proposed term forms of backup and disaster recovery, that is 100% saying it is appropriate and it should be. Next. This is relating to InvIT, whether lot size is 25 lakh for the purpose of unit place in place of earlier figure is also in favor. Whether the proposed revision of InvIT regulation clarify the changes in sponsor or inducted sponsor can occur on account of either of entry of the new sponsor or exit of the existing sponsor is appropriate. That is also say yes, 86%. Then NCS suggestions, whether the proposal regarding removal of disclosure of PAN on the promoter of the issuance of the offer document is appropriate, 70% yes. Whether the proposal regarding removal of disclosure personal address, that is 70%, that is also the same. Whether proposal aligning the period for key and operational parameter is also 86% say yes. Next, then whether proposal of disclosure regarding about the branches through QR code is 86% yes. Whether the branches, unit, issuer and date of the offer provided debenture trustee kept in available in inspection, that is also 71% say. Security and covenant monitoring system is also 80% yes. Next, whether the proposed Shivam, last slides you just go. Shivam, last slide. Okay, so the QR code is also there, and this, I think this is the last question, last thing he has asked in poll. So the major initial, except initial point which people are asking, remaining point is welcome by changes as per the people from the industry. So what we will do, madam, the suggestions which we have discussed today and the poll, we will compile it and send it to you. And simultaneously, before 30, we are doing one more poll amongst the other people also, other REIT and InvIT and the other corporate which we are sending. So it will have a better representation, because here only present and voted. So we'll get other views also. So with this thing, yeah.
Yeah, so my only one suggestion is that of course the poll results and all, you can send it to us and we will look at all the comments also. But if participants or you are also commenting on the actual this thing, it would be easier for us if you actually do the online commenting in the system itself, in our website only, because then what happens is we can take. So now if you send it by email, it becomes very difficult for us to collate again into the system.
We will send it to you. Yeah, we will send it to you.
So, in the online.
Before closing this session, as per ritual, we are asking the comments from the panelists about this. So from your side, what message relating to this you want to give? So I will start with the SEBI team, and madam, you will give the last. From your side, Kiran and Pawan and Rishi, anything which you want to give message to?
It was interesting to have an interaction during the consultation phase itself, And I think so most of the doubts, it happens that there are some doubts on clarity aspects, whether, because what we write and what we actually orally say, there might be differences, because the people who read the consultation paper, it might be he has taken some different interpretation. But through this webinar, when we orally we come and we say that this was our intention, then people also do understand what was the intention of the regulator for coming out this policy change. And because there are a positive intent behind each policy change which regulator proposes. And I think so it's a good platform and wonderful initiative taken by a corporate professional, where regulator can on a written side give a consultation paper and orally even say the intent behind that, what written policy change we have suggested or proposed in the consultation.
Okay, Rishi, you want to say
Yeah.
anything?
Yeah, as Harin Madam just initially, when she started the initial remarks, she said correctly that it's a right place, right forum, and a right time. So basically, it's a two-way approach, which has to be there in a consultative process. So thank you, sir. You have been a great moderator. You have moderated the session so well, where you have brought out the comments from the industry side and also helped us explain why the regulation, why we had done the rationale behind the say changes. So I believe this consultative approach will definitely help in understanding the industry thoughts and views, and also help us in aligning those views and have a regulation where it would be help, because finally it's the ease of doing business. So it has to be a balancing side from both the parties. Thank you.
Okay, Charu, from industry side, you want to say anything? You have to unmute yourself. Yeah.
Yes, Pavanji. Pavanji, it's been a fantastic forum, and to meet SEBI people here and interact with them and make some kind of presentation from our side. We also understood their aspect and their thought process on why they want to do or want to change certain things. And this is of course going to be very helpful. Such webinars will always be very helpful. Thank you so much for moderating this session also. Special thanks to Harini ma'am to, spare this time and, make us aware about what the thought process is, so that, we are also geared up and prepared to kind of, think through and then decide on how we can then change our situation internally to make the compliance work. Thank you so much.
Before I'm going to the last Charu, my Charu and Priyansi, we are not taking your comments. Hari madam, I have just few points which I want to just tell, because tax advantage is there in this, but as per the income tax law, the capital gain tax is for 12 months for equity, but here unit is a 36 months. So that is one hindrance. If you SEBI can push forward to the government, it will be very useful. Second is the uniformity of law, like in the company law they have done, in the LODR and ICDR they are also doing. So in your things, which is REIT, InvIT, and this type of instrument, which is not equity, if one thorough discussion on the basis of this law, that where other than whatever you have suggested you have done, but simultaneously if you can do this also, this exercise, that wherever the word is coming which is creating a difference of discussion, you can bring out, like working days you have done, and there are some other definition also which is now clear in company law also, in ICDR and LODR also. So one exercise when you are coming out the changes, you can bring out. That is one suggestion which I just want to tell. Second is the education is more important. If you see, we are doing more on equity side, but now the debt side is also becoming very, very important, and educating and promoting both type of instrument, it will be a good move from SEBI side. And then second is, in India we are having a very limited investment. Like I have seen in India, there's nobody in data center. They're investing, healthcare, they're investing, tomorrow, other hospitality industry. So if we can encourage people, because data center is also today US is doing, and same time in India, the road power transmission and other thing can also take place in which that is another aspects which we can work out. And the last point is sustainability and ESG. Now, what is happening? ESG is coming everywhere. So REIT InvIT also, that if you, because everywhere there's a mutual fund, they are investing in ESG compliant. So you can also say the REIT and InvIT, which are more ESG compliant, more things, and you can push forward them that they will get additional mileage if they are ESG compliant. That is also there. And last, yeah.
I will just want to add something here, that most of the REITs are already BRSR compliant. So they are already, we are also for the first year, we are also going ahead with that. So Pavanji, just for your this thing, I was just
no, the actually ESG is far ahead than BRSR, and you can understand BRSR is a system which in India we are following by tick system. We are not follow the spread part, we follow the letter part. I'm just saying that you inculcate the ESG in your system. That is very important, and that, yeah, you are right, but we have to do so many more things on ESG. Okay, last word, madam, from your side.
Yeah, so I think on the tax proposals that you have said, we have already raised it with the ministry, and we have also given it as a budget proposal to the ministry. So we will have to await their how they look at it, and so all the other things, suggestions that you have said, we can take it forward wherever appropriate. So we can touch base with offline with you people and also take forward whatever is required. And one thing on that poll, that issue, that first point Ms. Charu was also saying about the working days reduction to 5 working days. So that is the only thing that is coming out of the whole thing as being a little lesser acceptable than the other comments, other recommendations. It is just what we have to say over here is, with the growing technological advancements, and we are actually one of the foremost in the country or in the world, where we have given such UPI transfers and RTGS and NEFTs and all those things. We are foremost in the world. So other jurisdictions are emulating us in giving transfers so quickly and all those things. So in that scenario, going forward in this technological world, investors will more and more ask for immediate gratification of whatever they are doing, whatever sales they are doing, and whatever they would want to churn the funds. So and in REITs and InvITs, there are private players who are investing in bulk. So when they redeem, or they want the distributions also to be quicker, so that they can put it in other places in so much more quickly. So these are things that the industry will have to at some point in time get used to, and kind of spruce up themselves and the systems. So once you ask for it, the systems, the banks, the depositories, everybody will also kind of pull up their socks and come forward to do a better thing. So that's what I would leave with all of you, that one has to just keep trying to do things better and better. So I think the Ritesh has something to say.
Yes,
So we
yes.
can just
Yeah, Ritesh,
Yeah.
please.
Thank you. So to add to what ma'am said just now, see, in REITs and InvITs, it is mandatory to hold units in dematerialized form. Like in shares, there's still an option available to shareholder, but in REITs and InvITs, right from day one, we have made demat mandatory, and that brings a lot of advantage. Whenever there is a distribution, the information is available almost on a real-time basis. We checked it with depositories and RTA. So if something is sought, say today evening, maybe by tomorrow morning, the BANPOS or we call it as BENPOS, in common words, unit holding pattern, will be available on an almost immediate basis. Second, there are unit holders who are long-term unit holders. So those unit holders do not change very frequently. So whatever is the tax status, that will be available at the end of investment manager at all times, unless there are new unit holders who keep on coming. But that also can be automated to a large extent, and that can be downloaded in very less time. Payments are also electronic and almost real time, like RTGS or IMPS and EFT. So payments can be cleared on a real time basis. And we have been reducing it for the benefit of the investors and the product at large. Even for mutual funds, as we said earlier, it has been reduced substantially. If you look at when the regulations were notified to today's date, REIT InvIT, this has been 15 days right from 2014 when the regulations were notified. So we also got input from the working group, and we thought that with this technological advancements, it can be reduced significantly. So with that expectation, we have floated that proposal. So this is what I thought I'll add to what Harini Madam said just now.
So you have correctly told, and that is also I'm also in this favor that now whatever you have to give investor, you have to give immediately, and that use technology. So thank you very much. So thanks, Harini Madam, for coming. With not only with you have come, but you have your entire team. So I thank Rishi, Ritesh, Pawan, Kiran for this joining this program and clarifying this. And sometimes what is happening when you read in detail and discuss, it will more beneficially. And what we will do, we will compile all the discussion point, all the points from our side, and our team will also, research team will also sit and work out. And wherever possible, we'll try to provide you some changes which are not part of this, but if you can bring this, and we'll submit the poll also. So wherever the issue is there, you can reconsider, you can discuss, or you can convince, or you can bring out this. So thank you very much. Thank you, Charu, for participating and giving a thought from the industry side. Thank you, Priyanshi and Charu from giving the presentation. And thanks everyone for participating, and especially participants, those who have come, because this was a very topical subject, and topical as well as very niche subject. And those who are here more from the REIT and InvIT side, and those who are coming out with this debentures and other things, but it will be a good move, and it will create a more investor base. So thank you very much all. So our journey of giving knowledge to the society will continue. Our next webinar is 174, is 31st May on the LODR, the new concept of rumor verification and the price fluctuation, that we will discuss, and we will meet you same time, same place next Friday.